continues its up move. Stocks up about 5.5%. And by the way, the list of volume-led gainers is still, I read, I think about 10, 12 names. There's another 12, 13 names with equally strong volumes, which I think we'll address as we go along. But Mithun is with us. Mithun is a managing partner at Kivah Advisors. Mithun, it's, just incredible, right? The breadth of this move that we are seeing.
Yes, Prashant. Good afternoon. I think, obviously the last couple of months you've seen the market broaden and, there has been immense participation in the mid and small cap companies post the Q1 results, which were quite strong across the board. And with the RBI keeping rates at bay, I think, there has been significant participation through mutual funds as well as individuals investing in the mid and small cap side.
Are you participating? Or I remember last we spoke, you were, and this is a problem, right? A lot of people, for example, we had Nilesh from Kotak in the morning saying that micro caps, small caps, not mid caps, micro caps, mini caps, valuations are very rich. I think in June when we spoke, you were also saying that across sectors, valuations are kind of rich. But they've only gotten richer. So you're sitting on your hands, Mithun, or jumping in?
Prashant, I think selectively, one needs to look at the fundamentals. And, there are still opportunities there where the risk reward is reasonably favorable. There are companies, I think, largely on the capital goods, anything to do with the capital investment on the railways, as well as road sector, where, the order books are getting quite chunky. And there have been order wins across the board in a lot of these capital goods, EPC companies, which are trickling in every month. And we think over the next couple of quarters, this pace may remain quite strong. And hence, I think, these were spaces which were kind of ignored for the last few years. And since now reality is also catching up, the stocks are reacting because you have phases of capex. But I think we are definitely in a full-fledged sort of a capex cycle. And that is definitely what you're seeing on the screen.
By the way, another stock that's at a fresh lifetime high is Maruti Suzuki. It's gained 3.3% in trade, and now it's well above that 10,000 mark, 10,336 on Maruti Suzuki. The auto sales numbers are looking good for the month of August. 14.5% increase year on year, and on a month-on-month basis, their sales have gone up by 4.4%. So the stock is reacting positively to that. Eicher Motors is also significantly higher in trade. Here we only have the VECV numbers, which look good, 29-30% on a year-on-year basis. But the street will watch for the Royal Enfield numbers. July was a pretty good number as premiumization continued. Aswath, anything in the auto ancillary pack which has caught your attention?
I think, Rima, we continue to hold our guns on the two companies that we've been talking about, Tata Motors and Eicher Motors. Those are the two companies that we've been positive and continue to be quite constructive on. Tata Motors, especially with the JLR business, turning quite profitable, as well as their EV play in India, which has a dominant position. While it comes to Eicher Motors, I think obviously there are some competition headwinds on the higher-end motorcycles. But I think there are a slew of launches even from the Eicher Motors stable in the next few months. And I think the market size itself on the higher CC motorcycles is going to grow, and Eicher will lead the way.
Okay, so keeping the faith in Eicher Motors, had a product launch today as well, right? I think another Royal Enfield bike that they have unveiled. Good chatting with you, good listening to you. So just want to talk about one more sector, Mithun, and that is this whole new age company space. We've seen the huge move on a Paytm, for instance. PB Fintech has been, showing some slightly improving metrics as well. Are you willing to dive in, look at any of these companies, or maybe a Nykaa for that matter?
I think, Surabhi, the space, obviously, after the IPOs, a lot of the stocks did correct. And right now they're in a phase where, the PE investors are exiting and the funds are entering, and a lot of that overhang in terms of stock is getting absorbed. And that's the process what we are going through right now. In the same time, I think a lot of these companies which were reporting losses at EBITDA and profit at the PAT levels are, looking to turn around. But one needs to kind of try and assess the valuation and see when they will actually become profitable. And even if they report a certain quantum of profits, does it make sense to buy? Or you look at companies across the market. I think you'll need to evaluate company by company. I think PB Fintech is the only one we have in our portfolios where, there is a path to profitability, and the company is also guided for 1,000 crore profit by FY27. Hence, we're looking more at companies where, the profit visibility is a lot higher.
Mithun, sorry, so just to kind of revamp back to what you said earlier, so this capital goods and the revival there, what do you own in that space? I mean, because it's real. I mean, we had Tata Power with us, for example, and we'll put out a story a little later about power and power demand going through the roof. So this NTPC order is a large one, 15,000, not order, but their investment to set up this power plant, 15,000 crores, right? When is the last time we heard something like that? Not in the last 10, 12 years. I mean, if this is going to play out, then, you can say that stocks have gone up. Say, for example, BHEL is up 100% in the last 1 year. But if this is turning and it's the start of these kind of orders, maybe a few more, there's no telling what these stocks can do from here. So you'll have to look at, it's a bit of a leap of faith, but it's playing out. We can see signs of it at least right now. So do you have exposure, and what do you own?
So Prashant, there are 2-3 ways of playing this. And I think this is across the board manufacturing renaissance that we are seeing. It's happening even in the US. Though interest rates are high there, you're seeing manufacturing, construction, close to 80% growth year on year. Primarily because if in India you have PLI, in the US you have the infrastructure bill, you have the Inflation Reduction Act and the CHIPS Act, which they have embarked upon. So I think in India, what we are trying to play through this in our portfolios, we've bought into, we have exposures to the steel sector, also the building materials in terms of cement. I think all these will also grow if the capex is here to stay. And recently, we've also added one of the public sector companies on the defense and railway side. So this is the way we've taken exposure so far, Prashant.
BEML? Maybe? I'm sorry.
Yeah, even I was trying to guess which public PSU is both in defense and railways. So, Prashant, your guess is BEML.
BEML does it, BHEL does it, I don't know. Which one does
BEL.
There are others
which
also.
one?
It's the Bangalore-based company, Prashant.
BEML.
Okay.
Yeah. Okay. All right.
Mithun, I remember last time you were telling us that textiles, you're quite bullish on textiles, and you see the cycle turning, the inventory levels are quite low, ordering will pick up, we're entering into the festive season, operating leverage is also going to play out, cotton prices have largely, come off from the levels that they were. Now, one stock in that, Gokaldas Exports, has gotten re-rated after, the acquisition that they did earlier this week. It's up 40-50% since the acquisition was announced. Is that one stock that you own in your portfolio?
We've had exposure earlier to Gokaldas, but at the current juncture, one company that we like within the textile space is Arvind Limited. This is a company where, you have exposure to both denim, garments, woven textiles, as well as technical textiles. They have an advanced materials division, which is growing very well. And we think this is highly undervalued, considering the advanced materials business, which has been growing consistently at over 20%. And we actually think that business could grow at about 25% over the next few years, as the company has announced about a 600 crore capex on both the garments as well as the advanced materials division. And the advanced materials division alone in the next 2-3 years could be as valuable as the entire company if they would choose to, demerge and list it separately. And, the Arvind Group earlier has also unlocked value by demerging Arvind Fashions and their engineering business. So I think that is something that looks very interesting to us because the size of their garments business, their technical textile business is growing. And that's something that we are quite positive on.
All right, Mithun, interesting thoughts there. Good chatting with you as always. Thanks very much for stopping by and talking to us today. Have a great weekend, and we look forward to the next Connect. Well, back to the market, 180 up, no problems whatsoever. Bulls in absolute control as we get into the last 20 minutes of trade for the week. Quick break right now. We'll come back, get you a check on the dealing rooms. Nimesh is going to join in with all the chatter and all the talk, and then some final trading ideas as well coming up with Nitesh.